really super awesome. So thank you for all the love which Wealthology has received till now. Today we are going to talk about stock exchanges. Now when we talk about stock exchanges, so stock exchange is a place where there is exchange of stocks. And when we say stocks, it may be shares or it may be commodity mainly. There can be other things also. But mainly when we talk about stocks, it is either shares or it is commodity. And in Indian context, when we talk about stocks, so there are three major stock exchanges. One is BSE, that is Bombay Stock Exchange. The other one is NSE, the National Stock Exchange. And the third one is MCX, Multi Commodity Exchange. Now, to facilitate exchange in these stocks, there are various regulators which regulate the exchanges, and then there are intermediary parties which play a role in exchange of these ownership shares, whatever you call it. Now, all of these brokers, which the intermediaries are called brokers, and they charge certain commissions to facilitate this exchange. Now, there are basically two kinds of terminals involved into this process. The first terminal is from the regulator side, or maybe Bombay Stock Exchange or NSE or whatever exchange you are using. So the first platform is their terminal. Then we have brokers terminal. So for the exchange to take place, you need to have a buyer and a seller. If either a buyer is present or if either a seller is present, you cannot have that exchange. So you need to have someone who is willing to sell their shares, and then you need to have someone in the market who wants to purchase those shares at that particular price Now, if you will see, there are a lot of exchanges across the world, and there are a lot of people involved. If you see the markets going up, the Sensex going up, we hear a lot whenever there is a crash, whenever the market is going upside. So a lot of money exchange, whenever there is a exchange of shares. So whenever equity is transferred, so someone gets the money for selling their equity, and someone pays money to purchase those equity shares. At times when the organizations whose shares are traded, so they also purchase these shares just to retain majority shareholding, or at times just to have more grasp over the market. Now when we talk about there are two kinds of market. We talk about market in share trading, so the primary and secondary